Hello friends, this is Dr. Sunil Kadam, welcoming you to my channel, Let's Learn Accountancy with Dr. Sunil Kadam. On this channel, I will be uploading videos on various topics of accountancy. I hope you will enjoy these videos. Let us try and solve sum number 3 on investment accounting. The sum is in front of you. Let's read out. Mr. Ashok entered into following transactions of equity shares of rupees 10 each of Amul Limited. Date, number of shares and details. 1st April 20, 1,500 shares and 34,500 cost, opening balance it is. 15th May, 1,000 purchases at the rate of rupees 22 per share. 15th July, 2,500 shares, bonus shares received. 15th December, 1,500 sales at the rate of 22 per share. 1st March, 1,000 sales at the rate of 24 per share. Additional information on a 1st September 2020, dividend at the rate of rupees 3 per share was received for the year ended 31st March 2020. On a 10th November 2020, the company made a right issue of equity shares in the ratio of 1 share for every 5 shares held on a payment of rupees 20 per share. Mr. Ashok subscribed for 50% of the shares and sold remaining for his right at the rate of rupees 3 per share. You were required to prepare investment in equity shares in the books of Mr. Ashok for the year ended 31st March 2021. Round of figures to the nearest rupees. So that we normally does. If there is a digital answer, 0.5 above 0.5 will be converted to the next rupees. That will be taken care of. But let me tell you, friends, the earlier sum 1 and 2 was solved, which was a kind of investment where the fixed return was there. It was debenture having fixed interest rate. But this is what kind of investment where the returns are not fixed. The investment in equity shares gives us returns in the form of dividend, and the dividend is not fixed. It depends upon the profitability of a company. Therefore, the huge difference between debenture investment and share investment, there in a debenture, we used to calculate accrued interest. For each and every transaction, there is to be interest calculation. But in a debenture, that's not applicable. In other way, it is a little bit relief for us, because every transaction in a debenture account, either it is purchased or it is sold out, we have to calculate the accrued interest. And it has to be received or paid along with the price or excluding the price, because there were X interest price and cum interest price. These two concepts are not applicable in the case when it is investment in equity shares or preference shares. Is that clear? So the cum interest, X interest is not applicable, as well as no need to work out dividend each and every transaction. The dividend will be calculated when it is received. There is a one date given. See here, on a 1st September 2020, dividend at the rate of rupees 3 per share received. That's all. On that day only, the dividend will be calculated and recorded. Elsewhere, just merely the nominal value and the cost. Clear? Let's do it. And let me tell you, friend, this is the question on this slide, which will be solved as an investment account. That's what they said. You are required to prepare investment account. So we will prepare investment account on this slide in the books of Mr. Ashok. Investment in equity shares of Amul Limited. Date, particulars, nominal value, dividend instead of interest. What is there? Dividend instead of interest, and the cost. These are the three amounts column for a debit side, and credit side the same. Date, particulars, three amounts column. Nominal value means face value, dividend, and cost. So for recording transaction in this ledger, we required some working notes. So we will be preparing working note on this slide. Working note in a usual manner. The same columns are there: date, particulars, amount, number, nominal value, and cost. Someone may say, why this needed this much working note? Because you might have learned in the last two sums, whenever there is a sale, we have to work out the profit or loss on a sale. And to calculate profit or loss, we required the carrying amount or the cost has to be deducted from the cost of sale, price of sales. And we will reach either profit or loss, and that has to be recorded. Therefore, each and every time we required this. Even for calculating interest or dividend, we required the total number of face value of that investment on that particular date. So every time these information ready-made, readily available if you prepare the working note in this fashion. That's why we are preparing. And if there is any need of calculating further calculations, we will work out on the next slide. So this is your question on this slide, and your investment account on this slide, and the working notes here. Let's do it one by one. The first thing, the first date is 1st April, that is commencement of this financial year. We have prepared for a 31st March, means 1st April 2020 to 31st March 21. For that period, for that financial year, we are preparing the ledger. That's an investment account. This is what an investment account for the year ended 31st March 2021. There is opening balance. That's what it is said. There is opening balance of 1,500 number of shares. The face value is 10. So 1,500 into 10 is 15,000 is the nominal value of face value. And the cost is given 34,500. So we have to record. Let's record in a working note. Date is 1st April. Opening balance 1,500 number share. 15,000 is nominal value because 10 rupees per share. It is not debenture, it is share. So the cost is given 34,500. If it is debenture, we could have worked out the interest. But this is shares, therefore no need to work out a dividend received. Dividend will receive and record only the dividend received date. Otherwise, no need to work out accrued dividend. There is no such things available. Accrued dividend. Dividend normally receives when it is declared only. So let's record in the investment account. To balance brought down on 1st April. To balance brought down 15,000, and there is no dividend. Only 34,500 is cost. Hope you understood. Let's go to the question. Check out the next transaction. 15th May. 15th May, 1,000 purchases at the rate of 22 per share. The dividend is received on September. Therefore, 15th May, we can record these purchases. There is no X interest or cum interest available in equity shares. That available only bonds and debentures. So 1,000 purchases. Let's record. 22 is the rate per share. On 15th May, let's record in a working note. On a 15th May, purchases. What's the rate? 22. 22. Rate is 22. Rate is 22. Let's check out. Kitna aata hai? 1,000 into 22. 1,000 into 22. It comes 22,000. That's what the purchase price. So how much is purchased in a number? 1,000. And the nominal value 1,000 into 10. 10 is a nominal value. That's why face value. That's why nominal value 10,000 and the cost is 22,000. That's what the purchase is. No need to work out interest or nothing. Just record it. 22,000. Just record. The entry will pass to record this transaction. Entry will pass. The investment in equity shares account debit. Investment in equity shares account debit 22,000, to bank 22,000. So posting will go investment account, investment in equity shares 15th May, to bank 10,000, and it's here 22,500. Sorry, 22,000, not 500, 22,000, because 22 rupees per share. So 1,000 shares have been purchased. That's all. So after this purchases, let's check out what is the balance available with us. So the balance after this 5th May, 1,500 plus 1,000, 2,500, total 25,000, and the total 56,500 is the cost after 15th May. So let's check out what's the next date in the question. Till this date, everything is fine. Let's go there. 15th May. On a 1st September and 10th November, but prior to that, there is a 15th July. 15th July 2020, 2,500 bonus shares received. Bonus shares have been received by Mr. Ashok from the Amul Limited. Now, Amul Limited, when issues the gives the bonus, they give it free of cost. So the shareholders gain the numbers, but the cost remain the same what was there. Therefore, in the books of the as far as the cost column is concerned, there's no record, but the nominal value keep on increasing because 2,500 bonus received, the number increases, the nominal value increases, but the cost zero because they haven't paid anything. The entry will pass only that the number of nominal value will increase, number is increased, but to keep that record only nominal value, we have to increase it. There is no need to record in a cost amount. Let's check out. How much is it? The bonus is given. It's given directly. Kitna 2,500 bonuses received. Bonus shares have been received. So 2,500 into 10, 25,000 nominal value will increase, but the cost remains same because cost paid zero. Let's record it into the working note first. Date is 15/7. Bonus shares received 2,500. Nominal value increased and the cost is paid zero, nothing. After the bonus shares, now the cost available, the balance available after the balance after this is total 5,000 and 25,000 is cost. Sorry, nominal value, and the cost is 56,500. Now let me tell you, friends, before the bonus, for a nominal value of 25,000, cost was 56,500. But after the bonus, nominal value is 50,000 and cost is 56,500. That's what the difference before bonus and after bonus. Therefore, the recording of the number of shares increase or the nominal value increase is important to find out a profit or loss correctly, appropriately. Okay, so let's record this bonus in a ledger account also. In a ledger account, we will write on a 15/7, 2 bonus in a nominal value only. Nothing will be recorded here because cost has not paid a single penny. 25,000 nominal value has been increased. So automatically this number is increased and the cost remains same. Right. So let's check out the next transactions given to us. What was it? 15/7 is completed. 15th December, but prior to that, 15th December and 1st March, there are 2 sales. We will record it, but prior to that, there are 2 transactions given as additional information. On a 1st September 2020, dividend at the rate of 3 per share was received for the year ended 31st March. So dividend is received on 1st September. When it is received, it will be recorded. So now we have to record it. It is 3 per share. Now let's check out in a working note how much the balance available on a 15/7. Total 5,000 number of shares are available, right? Out of these 5,000, the dividend is paid on the balance of 1st April or 31st March. whoever balance were there, for them, they will be given the dividend at the rate of 3 per share. But as far as this person, Ashok, is concerned, his balance, his account shows that he is holding 5,000 number of equity shares. So one can say that 5,000 into 3 per share should be 15,000, should be the amount of dividend received by Mr. Ashok. If it is so, it is incorrect calculation. Why? Let me explain that. See, 5,000 was the number of shares and the rate is 3 per share. So it is 15,000. Obviously, one can say, ki, sir, as per this adjustment, see, on 1st September 2020, dividend at the rate of 3 per share was received for the year ended 31st March 2020. But this information, 31st March 2020, is important. The dividend is given on this balance. So Mr. Ashok having 5,000, on that 5,000, he will not able to receive the dividend. So let's check out how the dividend is calculated. Calculation for dividend. The company declared a dividend at the rate of rupees 3 per share on the balance of 31st March. So we knew this. Therefore, total shares held by Mr. This particular Ashok is 5,000, right? Out of that 5,000, the bonus was received on a 15th July. The date of dividend is 31st March. The bonus is issued 15th March. So obviously, these 2,500 bonus shares which we received are not eligible for a dividend. So dividend will not receive on this 2,500. So we have deducted. So balance available, the 2,500 are eligible for dividend, right? Out of it, let me tell you, friends, let me show you to the working note. See here, the Mr. Ashok having a opening balance of 1,500, it indicates that these 1,500 shares have been held earlier. This was a balance of Mr. Ashok holding it prior 31st March. So on that, he will get a normal dividend. But he will also receive a dividend on the purchases. This was there a balance in the company's account. There was a balance, but it was held by Mr. somebody. And Mr. Ashok purchased on May. So on these shares, whatever debenture will, not debenture, dividend will receive is the dividend on a pre-acquisition. That dividend is received because of the prior of the purchases, because 31st March was the date of dividend. On that date, it was there, but held by somebody else, was not belongs to this particular person. Ashok is not entitled for that, but still he is receiving. So that much dividend will be deducted from the cost of the investment, because that much amount he is getting because he is not liable for it. So let's check out. Here, out of this 2,500, there was a purchases on a 15th May, 1,000 rupees. It is eligible for a dividend, but this dividend will be credited from the investment account. 1,000, 3 per share, 3,000 will receive. It is pre-acquisition dividend. Hence, it will not be considered as a normal dividend and will not be credited to the profit and loss account. It will be credited to the investment account. Understood? Similarly, now the remaining 1,500 was there right from the beginning. It was there right from the beginning, are eligible for a dividend for 1,500, 3 per share, total 4,500. That's a normal dividend, post-acquisition wala dividend, and it will be credited to the dividend account. So we will pass a journal entry here. Entry would be bank account debit. Bank account debit 7,500, because 2,500 into 3, 7,500, to dividend account 4,500, to investment in equity shares account 3,000, because that is credited to the investment account. That much benefit transferred to the investment account. This is what we learned, how to tackle the dividend or interest received pre-acquisition period and post-acquisition period. If it is post-acquisition period, then it has to be treated as a normal income. If it is a pre-acquisition, before the date of purchases, any returns are received, it has to be deducted from the cost of that investment. Therefore, it is credited to the investment in a shares account. Got it? So this one will be recorded in a working note. We will write here 1st September, dividend received, hold a balance 1,500 into 3. It is credited to the dividend account 4,500. And the new purchases was there 1,000 into 3. It is a pre-acquisition dividend. We will receive this amount, but it will be credited to the cost. It will be credited to the investment account. After this dividend, the balance is available on 1st September is 5,000. Number of shares, nominal value 50,000, and the cost again it is reduced 53,500. So this two journal entry which we have already discussed has to be recorded by passing the entry. Entry will be bank account debit 7,500, to dividend 4,500, to investment in equity shares 3,000. Posting will go to the investment account credit side 1,920 by bank. In a nominal value, nothing will come. Dividend is received 4,500 and 3,000 is credited to the cost. Understood? So let's go and record the remaining transactions. So here we have recorded the 1st September dividend received and learned that if it is pre-acquisition, any returns, it will be credited in the investment account. So on a 10th November, the company made a right issue of equity shares in the ratio of 1 share for every 5 shares held on a payment of rupees 20 per share. 20 per share will be paid, right issue. When there is a right bonus issue and a right issue. Bonus issue, nothing will be charged by the company. The shareholders don't have to pay anything. But right issue, the shareholder has to pay the demanded amount. The amount was 20 per share. They will pay it. But what happened? There's no compulsion for the shareholders to accept all these right issues. What happened? The Mr. Ashok subscribed only 50% of his right share, and 50% he has sold at the rate of 3 per share. So we need to record this transaction. Let's record in the books of. For we need to calculate first by how much right is received. For that purpose, let's do some working note. Working note for calculation of right shares. The right shares are issued 5:1 proportion. One may say, how it is 5:1, sir? Let me show you in a question. It is told that on a 10th November, the company made a right issue of equity shares in a ratio of 1 share for every 5 share held. It means if you have a 5 shares older balance, then you are eligible to get 1 share as a right share. So let's check out. In this case, if you hold a 5 shares, you will get a 1 right of getting new shares. So 1 right. Therefore, Mr. Ashok hold a 5,000 shares. That's what we knew. See here in a working note. The number of shares held by Mr. Ashok is 5,000. So 5,000 is there. So he hold a 5,000. Right shares to be received by Ashok is. Therefore, we will calculating here right shares because proportion is 5:1. He hold a 5,000. So how much he will receive? Proportion will be mentioned here. Share held with the proportion of the right share will issue. If you share held and the right, the proportion is there 5:1. Therefore, if you held 5 shares, you will get a 1 right share, right? In a similar fashion, Mr. Ashok hold 5,000 shares. Then how much he will receive? X. So cross multiplication. Cross multiplication, then we will do 5,000 into 1 upon 5. Therefore, equals to 5,000 into 1 upon 5. The answer is 1,000. He will get a 1,000 right share. But out of this 1000, whatever he is going to get as a right share, the question says, what question says? The question said here, Mr. Ashok subscribed for 50% of the shares and sold remaining of the right share at the rupees 3 per share. It means out of that 1000, 50% is accepted and 50% sold in the market. So right shares issued 1000, out of which 50% subscribed at the rate of rupees 20 per share. So 1000's 50% comes 500. Therefore, 500 into 20 equals to 10,000 purchase price of shares. That is a right shares. This right share purchased. And remaining 50%, remaining 50% shares are sold in a market at the rupees 3 per share. Therefore, 1000 was the right which is received. Out of it, 500 is taken, and remaining 500, that is a 500 into 3, 3000. This will income will be credited to the profit and loss account by passing separate entry. Will be passed your bank account debit to profit and loss account, directly transfer to profit and loss account. It will not record it in an investment account. But investment account, we will record this much. This is purchases. 500 shares at the rate of rupees 20. So let's record in a working note. The right issue, we'll say here, right issue 5:1, 5,000 into 1 upon 5, 1,000, out of which 1,000 into 50. 1,000 into 50 is what upon 100. That is 100. Why? Because 50%. The 500 into 20 rupees is the purchase price. So the amount comes 10,000, and that amount is the cost for how much? 500 shares. So number of shares purchased 500, nominal value 5,000, because into 10 face value 5,000, and the cost is 10,000. After the right share, the balances are, but the remaining 500 shares have been sold at the rate of rupees 3 per share, sold to the market. So no, it will not be recorded here. Only these 1,500 is considered as a other incomes and charged there, right? So the balance after right share is 5,500, 55,000, and 63,500. Now this right share we have to record into the books of accounts, investment account debit side, to bank. The nominal value is right share issued. Nominal value is 5,000, and the cost is 10,000. Is recorded. Now we have finished these two transactions. Now we have to turn to the transaction on a 15th December, 1,500 sales 22. Let's find out a profit or loss on this sales in a working note. In a working note, 15th December sale 1,500 at the rate of 22. Amount comes 33,000. Now we knew for a 15,000 nominal value, cost is 63,500. We are going to sell out 15,000, 1,500 into 10, 15,000 nominal value. What could be the cost? So 15,000 into 63,500 upon 55,000 will fetch you the cost. Let's work out less weighted average cost of shares. 15,000 into 63,500 upon 55,000. Answer comes 17,318 is the cost. So let's deduct it. It is for 1,500 shares we are selling. The nominal value 15,000 and cost is 17,380. See, for 17,318 is sales, and this the cost is and sold for 33,000. There is a profit. So profit on sale is 15,682. This has to be recorded by passing the entry. Entry will pass bank account debit 33,000 to investment in equity shares account 17,318 to profit and loss account 15,682. Posting will go to the investment account credit side by bank in a nominal value of 15,000, because 1,500 sold out and the cost of sale is 33,000, and the profit will be debited here 15 December 2022 profit and loss account 15,682. So ultimately the cost is credited. 33,000 minus 15,682 is recorded. Hope you understood. See here, the profit is worked out. After sale, the balance available on 15th December is 4,000, 5,500 minus 1,500, 4,000, 55,000 minus 15,000 is 40,000, and the balance 46,182. This is what are available to us. We have finished this the slide. So we will go to the next slide and carry forward the balance 4,000, 40,000 and 46,182. So here 15 December balance 4,000, 40,000 and 46,182 is carry forwarded. Let's check out in the question paper, the last transaction, 1st March, 1,000 sold for 24 rupees per share. Let's find out is the profit or loss in similar fashion. Here, working note, 1st March, sale of shares 1,000 at the rate of 24,000. Now we need to find out 1,000, matlab 10,000. 1,000 into 10 is 10,000 nominal value. What could be the cost? Cross multiplication. So 1,000 into 46,182 upon 40,000 is the cost. Weighted average cost of shares. It is 10,000 into 46,182 upon 40,000. Cost is 11,546. So we are selling at 1,000. Cost is nominal value is 10,000. Cost is 11,546. So for a 24,000 sale, cost is 11,546. It seems there's a profit. Profit on sale, it's a 2,400. And this has to be recorded by passing the entry. Bank account debit 24,000. To investment in equity shares 11,546. To profit and loss account 2,400. So ledger posting in investment account, credit side 1st March 21 by bank. It is 10,000 nominal value and it is sold for 24,000, and the profit will be debited on 1st March 21. Profit and loss account, profit on sale, it is 12,454. Indirectly, we are giving cost effect. 24,000 minus 12,454 is what that working note shows here. 2,400 profit. It should be 2,400. No, it could be 24. I need to correct it. 24,000 minus 11,546. It comes 12,454. It's here. 12,454. So in a correction, in a working note, I have to correct it. It should be minus 24,000. The loss is what I will correct it. It's not 2,400. 11,000 something. That's what we have recorded here. Yeah. 12,456 is the answer here. Okay. So after that, we have to close this account and find out the balancing figure. 4,000 minus 1,000, it comes 3,000 and 30,000. And the balance 46,182 minus 11,000, it comes 34,636. Let's check out. Is it the same in an investment account? It should be. Let's check out. At the end, we have to close this account. And normally we will first close the nominal value first, then cost value, and then dividend account. So let's check it, get a total 55,000. That comes to the credit side, 55,000, the balance on a 31st March by balance carried down, 55 minus 25,000, it is 30,000, right? Similarly, get a total of these cost column. It comes to 94,636 that will be charged to this side, the credit side, and this much will be deducted from the 94,600, and the balancing figure is 34,636. Check out, is it the same? 34,636. It's a similar. Now let's go to that. We have to close the dividend account. In a dividend column, credit side only 4,500. That's with the total. Get to the debit side, and this will transfer to profit and loss account by passing the entry. 31st March 2021, entry will pass that dividend account debit to profit and loss account. So dividend account debit side to profit and loss account. Amount is 4,000 transferred to profit and loss account. In this manner, we have to prepare the investment account. In equity shares, Amul Limited, in the books of Mr. Ashok, we have prepared working note and shown the answers each and every time. Then it wasn't enough. So on a next slide, it is prepared and we worked out. And first we have calculated dividend. It is received, out of which one portion is pre-acquisition and another is in a post-acquisition. Pre-acquisition is credited to the investment account and post-acquisition is a normal income and it is transferred to dividend account, and later on it will be transferred to profit and loss account. But the profit or dividend or returns received for the pre-acquisition period has to credited to the investment account, right? And then we have worked out the right shares, and the right shares are proportion was 5:1, and he hold 5,000 shares, so got a 1,000 share, out of which 50% he accepted and 50% sold out. So whatever he accepted at the rate of 20 is recorded, and 500 into 3 per share, he is received income. Thank you guys for watching this video. If you have any queries, doubt, difficulty, or feedback, feel free to write in a comment section. Make sure to hit the like button if you understood the concept explained in this video. If you would like to see more such kind of videos, don't forget to subscribe this channel. Make sure to hit the bell icon as well in order to get notification whenever I upload a new video. Share this video with your friends in order to make them benefit out of this as well. Thank you once again.